Hey everyone, Ben Nelson here. It is that time again for a update on the Portland residential real estate market. So let us jump right into it here and see what's going on in the market. It is a crazy market if you're out there right now as a buyer, as another agent, as a builder, anybody that's in a lender, anybody that's in the real estate world right now. And I mean, a lot of markets, but especially here in the Portland, Oregon metro area, it is crazy out there. There is just a ton of offers coming in on anything that goes on the market. Things are going very quickly, going much higher than the asking price. Just a normal day for a realtor or a buyer right now, unfortunately, is being very, very competitive. Unless you're on the listing side, of course, then you're in a great spot as a listing agent or as a seller. But as a buyer or a buyer's agent, very, very competitive, very difficult. And you just have to be patient and you have to keep at it and be persistent. And you have to be aggressive on a home that meets your needs. So yeah, let's just jump into the numbers. Again, very competitive market here, as you'll see. So I'm going to share my screen here, getting better at this technology stuff, at least trying anyway. All right, so make sure that worked. Yes, it did. All right. So you will see here that new listings. So this again is February numbers. We're here in March, but numbers come out from the prior month. So new listings are down from both January of this year and February of last year, which is unfortunate because we're definitely very, very low supply already. You can see over here we have just right at that 1 month of inventory mark still. So we're really not gaining any ground. It would have been nice to see more listings and an increased supply of listings coming on the market instead of less. So that's not super encouraging if you're a buyer, unfortunately. And it's not super encouraging for the market as a whole, honestly. We definitely need more inventory is better than what we have right now. It's just not an equilibrium market. We really need to increase that supply level as much as we can. Well, not as much as we can, within reason, obviously. If we get back to like right in here where we were, that would be really great. A couple months, 3 months of inventory. Pending sales decreased, of course, because you can't really increase pending sales if you don't have more inventory in the market to sell. So that's not a surprise there to see that trend down, just because of the lack of inventory. Closed sales did increase. That's a leg. Obviously, closed sales come behind pending sales. So that's from pending sales December, January, closing in February. So both of those increased. So we had an increasing amount, December, January, but then now it's starting to decrease a little bit again. We're just not seeing the new inventory on the market. I'm just the optimist always or something, but I still feel going into March and April here we'll see some more trend up of inventory in the market. Really, really hoping that that's going to be the case. You can see, generally speaking, that happening when I get down to the charts later. That's kind of typical for prior years. March is when we tend to see more listings hitting the market. So I'm going to hold out hope for that. So again, new listings. So comparing the first 2 months of the year compared to last year, new listings are down, pending sales are down, closed sales are up. And again, that closed sales being up is because of the lag effect. That's December numbers for pending sales coming through to this year. And look at this average comparing through February this year versus through February last year. We have almost a 15%. Actually, in fact, the median sales price is over 15%. Average sales price is almost 15% increase. That is a lot. That is a huge increase in equity. If you're a homeowner, that's a huge, unfortunately, rates were really great for a while, and we'll touch on that in a minute here too. And so it brought a whole new buyer pool in about a year ago, maybe a little bit later than that, as we went into COVID March, and then we had a lot of this stuff happen, and going into like April, May, June, They pulled way back on interest rates. We had this huge influx. Now a bunch of people could buy, but now the other side of that is continue to push prices up. The combination of demand and limited supply and really low interest rates have just really pushed those prices up. And that means, unfortunately, a lot of those people that were right on the fringe of being able to buy, they're no longer. If they didn't take advantage of it during that period, they're no longer buyers, unfortunately, unless something drastic changes. We're not really going to see a decrease in interest rates, which is what helped last time. I really don't see a pullback in pricing, at least not anytime soon. So, really, it's probably going to be a little while before those people that were on the fringe and maybe can't now because prices have gone up and rates have ticked up a little bit. Might be a while, another few years before they're back around the horn again and able to be consider buying a home. So we'll see. Time will tell. But I don't see the numbers getting to where they need to be for those people that were on that fringe mark about a year ago. Anyway, getting back into it again. Again, as I won't look at all these numbers. I actually didn't even look at them, but I can almost guarantee you that all of the western suburbs are less than 1 month of inventory. It always is this West Portland area here tends to have a little bit more, and that throws all the Portland metro area numbers off. Everything else is pretty much less than a month on the market, or less than a month of inventory. Active residential listings, we have less than 2,000 listings on the market, which is about half of what we had last year, less than half of what we had 2 years ago. And we were hurting for supply then. We were better, but we were hurting for supply then. Now we're really hurting. And then you'll see right here. So this is where I still am kind of holding out hope, where February is not typically a great new listing month. It's usually March, April, where you start to see that spike. This year, obviously, we had a little different curve because of COVID and hitting in March and a big pullback on new listings until we figured out some of the protocols and everything, and then you saw it trend back up. So I think we'll see this again. Really hoping we'll see this again, because we just really need that increased supply. And again, so this is kind of what encourages me, is that this is typical for February. We're not a huge supply increase. We need March and April to come and that increased supply, which I think we're seeing. I've seen more stuff come up in the last couple weeks compared to the month before. And then there's pending sales numbers. Pending sales again down because we just don't have the inventory levels out there. If you look back up here, so we have what, 2,000, less than 2,000 listings, and we had 2,000 closed sales. So basically, that trend is anything that's getting listed, if it's even relatively closely priced to the market price, then it's gone almost instantly. That's pretty much it for on here. I did want to touch on a couple other things. So the bond market has been really interesting the last week or so, and why that's important is because the bond market affects interest rates, and we're seeing bond yields are rising. So this is the last week. Oh, I don't think I shared it, so hold on. I gotta share the right screen here. Share. Okay, here we go. That's better. So this is the last week. You can see that trend of the bond yields going up, and what that means is that is going to put, and we've seen it already. So here's 3 months. You can see where we're at. You can see the trend up, and we've already seen interest rates start to tick up, and we've seen some really interesting changes in some of the government-backed loans. And with second home purchases, investment loans, they're really pulling back on what they're wanting to do. They're going to hold a lot less and back a lot less. So that means rates are going to go up, costs are going to go up for your rental property and second home purchases. Now that doesn't mean that there's not other options that are a little bit less, because I haven't actually looked. I've heard that they could go up a lot, like a couple percentage points, which is a lot. So, go from 3.5 to 5.5% on an investment loan, that totally changes your cash flow picture. So I would encourage you to look at, mortgage brokers that maybe have some other options. If you need a connection there, that's feel free to reach out, and I'd be happy to do that, because they have a lot of portfolio lenders, in-house stuff, things that are not affected as much by those decisions with Fannie and Freddie. But so hopefully that will become a bigger picture of, and a bigger part of, like, your investment loans and second home purchases. They'll be able to continue to provide competitive rates and better rates. But for now, that's going to take a big pool of cash, or at least it's going to be more expensive cash for the purchase of investment properties. This was another one that I thought was interesting. I'm going to share this one now. I'm getting faster at this, I think. Here it is. So if you had to be under a rock if you have not, or you're just not a builder, I guess. But lumber prices have gone crazy. Every time I go to Home Depot, which is too often these days, but I swear it's, a 2x4 stud has gone up, another 20 cents, which doesn't sound like a lot, but when, you're buying 2x4s June of last year for less than $2, for a 2x4, and now you go and it's almost $7. Holy cow, that's a huge increase in the cost to frame a house and to do any sort of home improvement, additions, all of that. So that's a huge issue with, especially since we're already talking about the affordability issues. Now we've got this huge lumber increase in cost, and that of course increases the cost of construction. And builders, let's face it, builders aren't going to build unless they can make money. Okay, that's just the way that it goes. I'm sorry, but they have to make up. They're in the business of building to make a profit, and if their costs go up, then the prices of the housing has to go up, or they're going to stop building, which definitely we don't want, because you saw the inventory levels. We absolutely need the increased inventory from new home building. So this one right here, so it's interesting because it says home builder confidence drops as interest rates and lumber prices rise. I love headlines. They're just the best, because this is like, oh my gosh, home builder confidence drops. Okay, let's actually look here though. The index fell 2 points to 82, and anything above 50 is considered positive sentiment. So, okay, let's look a little bit past the headlines. Home builder confidence is still extremely high. It fell a little bit because of the cost of lumber, but I just wanted to point that, because we've got rising interest rates, which obviously affects the cost of housing from a monthly payment perspective. We've got rising lumber prices, which carries through to the cost to buy a home, because it costs more to build, and we have very little inventory, so we need to continue to build to increase that supply. That's just the way people are holding onto their homes longer. I can't remember where I heard it, but it used to be that everybody was, it was kind of 5 to 7 years was the average time people would hold, keep their home and then sell and move on to something else. And I think I heard it's like 13 years now or something like that. So it's double what it used to be for how long people stay in their homes. So that's another thing that's taking inventory out of the market, is people are just holding on to their homes longer. So we absolutely need new construction. I really wish it was easier and more streamlined and more cost effective to do so. A lot of politics and stuff there, obviously. I won't get into all the nitty gritty on that, but unfortunately, a lot of the fixes are usually more costs and more fees and more red tape, which doesn't really solve the problem. But I digress. Bottom line is we still have extremely low inventory. I'm really hoping that we'll see that trend in March and April that we normally see, where we get a bigger spike in inventory levels. Interest rates are trending up, and I don't think they're going to go nuts. I mean, they really are trying their best to keep it low, but it has affected some of the buyers that are on the fringe of being able to afford. And then we've got rising housing prices, along with it, and that's going to continue as well with the low supply levels and still the relatively cheap cost of money. Because I mean, come on, let's face it. I just laugh. I see some of these comments about, oh my goodness, interest rates are going up. And granted, on the investment stuff, some of that's a pretty big difference. That's pretty drastic. But come on, an interest rate going from like 2 3/4 to 3% or something like. I mean, yeah, it's 1/4%, but it's still really cheap money. Let's keep some perspective here. A decade ago, well, I guess longer than that now, but gosh, has it been low that long? I guess it has, but back in the mid 2000s, 6% was awesome. Like, whoa, I got a 6% loan and I'm going to do a second at like 8%. That's fantastic. I can get new in a house. So let's just keep some perspective. Okay. 3%, give or take a little bit. That's still a really, really good rate. Let's not freak out if it goes, up a little bit. We're still in really, really good shape. Lock in any long-term debt that you can get, whether it's your investment property. So, hope that was informative to you. If I can answer any questions or provide any resources to you, we just want to chat more about the market or where you trying to talk about where things are probably going here down the road. I'll break out my crystal ball and we'll chat about it, and would love to do that. So feel free to reach out, call, text, email, message, whatever's easiest for you, and would love to chat. So keep a lookout if you're local to we're trying to ramp up our investment group, Yamhill Valley Real Estate Investors Group again here. We've been doing stuff Facebook Live like this. We're going to try to we are going to do some in-person, very limited because of the restrictions still, which we're really excited about, so we can break down some numbers for analyzing investment property, that sort of thing. We're really excited about that. If you can't join in person, we'd love to have you on the live stream. But however you want to reach out and connect, we'd love to chat with you and just be a resource to you and help in any way that I can. Thanks for watching, and make it a great rest of the day.